Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hi, welcome back to the Investing Podcast. My name is Ben Nye. I'm joined here today with investment analyst Sam Frost. How are you doing?
Doing good.
And we are talking about Panera in light of the recent news from yesterday about the potential, looking at it as a potential acquisition, as well as kind of what led up to that. Because we've been following Panera for quite a while, probably since January, December timeframe.
We'll go December.
Early
on the call.
So what were you thinking in December about the stock, and what was some of your rationale for that?
Yeah, so Panera in December, they had started, or after the third quarter last year, they were talking about their Panera 2.0 upgrades. And just a quick backstory on Panera 2.0 is Panera had been infamous for a lot of hassle in their stores, and that is, you got people all over coming to go to lunch, and the line just gets crazy long. And then you finally order, and then you have to go stand in like a little line.
Or if you're like me, you get so irritated you just walk out the door.
Right.
Just to make a point.
And so that was a serious issue. And so then once you finally order, then you go stand in line to pick up your food. Right. And then the confusion starts over again. Just tons of people waiting to pick up their food, and then you grab it. And then the whole process starts over one more time while you look for a place to eat. So it's just not very efficient. So they started this Panera 2.0 upgrade to basically streamline their operations within the store. And part of that was also ordering online. You go on an app and order, and you can just go pick up you pay on your phone, you go pick up the food at Panera and just walk out. Like, you don't have to talk to a single person. Something else is they had the kiosks in there that you could order on the kiosk, so you didn't have to stand in line or whatnot. And so it just kind of like spreads out. So now, I mean, you could argue that like the line that used to be this long is now cutting to 1/3 of that, because you can order on your phone, you can order in kiosk at the cashier. They also bring your food to you if you order there, and you can go sit down and stuff. So basically, it had a lot of traction there. And after the third quarter, that was a huge quarter for their Panera 2.0 upgrades for their stores. They said they were going to finish it up in Q4.
And after the third quarter, the stock went down quite a bit.
And so the stock went down after the third quarter. That was partially due to consumers, or just the market sentiment towards the kind of fast food-ish. They're not quite fast food casual, I guess.
And they didn't buy into the story that it was actually taking
Right,
place.
And so what happened was the market had already kind of sold them off because there were some headwinds in that industry. And then they reported earnings, and their average number of checks, their average transactions per store, I guess total transactions, went down. And so the market was like, Panera's part of this struggling industry. But in reality, what happened was, since they had made this more efficient so that people could order, lunch for the office or for your whole family or something, you just go pick it up and come back home. What happened is the number, or the price per check, increased. And so the market, and a lot of analysts thought the same thing, like the market's just misinterpreted the results. And that's what caught my attention, was because I thought the same thing, because management had clearly said, we're not going to have as many transactions, but now our transactions are going to be bigger. We're going to make more money per check. And so everything was lining right up with what management was saying. And so I was like, this might be an interesting company. And then the main catalyst was that they said the Panera 2.0 upgrades, the margin expansion and everything takes 3 to 4, or about 4 quarters to really see the results, because they invest up front, they kind of compress margins with the training and added capex to upgrade the stores and whatnot. And then about 4 quarters later, you see this just huge growth in same store sales and margin expansion, all that. So I said, after the third quarter, it's that's a huge quarter. By third quarter of fiscal year 17, we should start seeing the bulk of all those that added benefit from their upgrades.
So what you saw, just to kind of summarize this point, is that you were trying to develop this differentiated view from what the market was saying. Market was selling off the stock because transactions were down. You say, no, this is all part of the plan.
Right.
this should have been expected, so I have a different perception that I can create value from.
Right. And so then fast forward to the fourth quarter, they came out and they said, all right, we're finished with our Panera 2.0 upgrades. They had talked about delivery a little bit in the past. They've been kind of trying to roll that out. They have a catering service that's done really well, but now they're trying to do, like if you order Domino's and they send the pizza right to your front door. So Panera started experimenting with that. And the CEO came out and said, I believe the CEO, might have been CFO, came out and said, these results, we think this could be better than Panera 2.0. And so after the fourth quarter earnings call, they went up like 8% that day or something like that. Had a great day. And the market started buying in. It's like, okay, so Panera 2.0, like, we're starting to understand like what y'all are trying to do, and now you're saying that delivery is going to be even better. So they just gained all this traction, and share price rallied from, I don't know what it was, like 215 before the earnings call, and now they're up at 280, 280-ish maybe.
Yeah, why don't you? So we, in kind of our process, what we like to do is when we look at a company, we have various buy targets and then we have various sell targets, and we try to go within that range in that way. And the range will move sometimes if there's new information, but we try to be relatively disciplined within that. And so we had a range on Panera, and I think we all came to a pretty good consensus on it. And I think our sell price, you want to tell them what we had on that?
Yeah, the bull case scenario, about 252. So about $30 too short.
Yeah, so unfortunately that's kind of what happens in like oftentimes, especially in these growth companies. And but when you get everybody on one side, all of a sudden starting to buy into this. And now what we're seeing is potentially is the potential for not only investors to buy into it, but another company. So yesterday, speeding up to today, the big news is that there are some companies that are looking at acquiring Panera or merging with them. And the top three that were mentioned are JAB, which is a private equity firm, Starbucks, and Domino's.
Right.
And so in response to that, Panera said that we are going to essentially put ourselves up for sale. We're going to be open to options. We will allow these companies to approach us and tell us what they want to do. So now with that added information, the stock is now 280, which we got to a price prior to the acquisition rumors that obviously was substantially lower than that. What are you thinking now in terms of the probabilities that a deal will actually go through, and what do you think some of the synergies would be with the various speculated parties?
So it's kind of interesting, because Panera is right in the middle of this like growth story,
Right.
with the Panera 2.0 and the
with still a significant amount of uncertainty.
Right. Yeah. So the delivery is like brand new. Like
Right.
that's a brand new thing. But I guess talking about the market finally turning around and realizing what Panera is doing, I guess some companies have bought into what they're trying to do as well. Interested why Domino's is really talking about, or they're one of the rumored companies to have shown interest. Not quite sure how that fits in, especially while Domino's has done so well by itself.
Right.
Seems kind of weird to factor into this integration of a complete different company. But I think one of the big things that people are looking at is their advances that they've made technologically with the Panera 2.0 and already having the catering business rolled out and trying to just kind of go a little bit deeper into the full-scale delivery. And I think that's what the main synergy that companies are looking at.
So with respect to like JAB, the obvious thing is, you could lever up Panera now that, and you may be able to get to a Starbucks multiple. And if you get to a Starbucks multiple of sales and be able to operate as efficiently as the Seattle company does, I think the enterprise value to sales multiple of Starbucks is what, 3.75.
And Panera is currently 2.24.
So for JAB, they're looking to exploit that. They're looking to increase the debt and maximize, so you increase the debt, same enterprise value, increase the debt portion, and then essentially reduce the equity portion, take that money out into your pocket, and then you have that leverage on the shares through the capital structure. You also have the opportunity to improve the operating business through the efficiencies that a lot of private equities tend to look to get, aka redundancy, etc. So that's the JAB thesis. If they were to do it, it would be a big acquisition for them.
Yep.
It would probably have to be somewhere in the order of $8 to $10 billion, I would imagine. And then you have Starbucks. And how would you see Starbucks actually playing into acquire Panera?
So it's interesting with Starbucks because I think that's the most logical acquisition would be for Starbucks. And again, building off of the technological advances that Panera has made, I also believe Panera has better coffee. Yeah. So maybe Starbucks is trying to make their coffee a little bit better. But the interesting thing about this whole situation is Panera has a large number of franchises. Mm-hmm. And so now you're not talking about just getting the whole company on board for this, but now you're also talking about integrating each one of these individual franchises, which could be a difficult feat.
Right.
And so although there might be a lot of synergies and a lot of advantages to acquiring what the developments that Panera has made, it's going to be a lot of integration costs.
Right.
And so although I think Starbucks or Panera is a great company, and I'm not shocked that other companies are interested in them, I'm almost not entirely sure that I would buy into whoever bought Panera with those integration challenges ahead of them. So something else I want to talk about though was going back to JAB, was they paid roughly 19 times EBITDA for Krispy Kreme last year, while Burger King parent Restaurant Brands International paid 21 times EBITDA for Popeyes.
So Panera trades at what?
And Panera is currently trading at 14.93.
So it's still 25-30%.
So you're talking about a huge upside if they were to shell out those types of multiples again. So like the Burger King, based on Panera's expected EBITDA of $443.6 million, if they were to get a 21 times multiple, that puts their share price about $3.93, which is outrageous. And a little bit of what I've seen from analysts is it almost seems like nobody expects them to get bought out for less than $300 a share. Obviously, $3.93 would be way up there, but you mentioned our sell targets earlier at like 252, but Panera was just running. We were kind of, we might as well just hold on to it for a little bit, see if we can just capture this upside. And
so when you talk about now Panera being potentially the subject of an acquisition, some of the ways I like to work that out is give a probability to, what's my base case, bull case, bear case, and then the acquisition case. Mm-hmm. So, but determining that, because the acquisition case is so skewed high, you have to be really careful on what the probability you use, because you can basically manufacture any price by using that methodology. So with those three potential acquirers that we talked about, Starbucks, JAB, and Domino's, what would you say is actually the probability that a deal does get through for north of 330 or 350?
Yeah, so I guess mathematically we could figure that out. If the market sold them up to 292, I believe, at one point yesterday.
Yeah.
So you could assume that's an expectation.
So what you're saying is you can almost back into that potential probability, and then see if that's fair or not. Right,
and so and the other thing I keep in mind is there's a huge short interest. So you can imagine that a lot of shorts were like, oh, acquisition target, just I'm gonna cut my losses now, get out. So it might be a little skewed because of that, but I don't quite know what the probabilities I would give, because like I said, for Domino's, I don't think it quite makes sense. JAB, you're acquiring a high growth company, like you said, with the PE magic, they could probably eke out, I don't know, some outrageous amount of gains from them.
It's all about that carried interest.
Right. And then Starbucks, I think, makes sense. But again, I always go back to the integration costs. And so I almost feel like it'd be easy for a company to say, hey, like, this is a high growth company. We like what they're doing. Let's look into them. You know, and that's interest shown. You know, they talk to Panera and get more ideas on what's going on. But then once they figure out all these franchises and integration costs, like, it's going to be a difficult acquisition.
You almost can't buy it with the assumption that you're going to incorporate them into like one entity.
Right.
You almost have to run Panera as its own entity, and then if that's the case, how much synergies can you actually get?
Right.
And then what does it justify paying when we still think that this Panera 2.0 may be quite uncertain?
Right.
So that's the state of play for Panera right now. We are long the stock. Unfortunately, not as big a position as we had before, but we do own the stock. We'll continue to follow this and provide updates as warranted by market movements and circumstances. This has been Sam Frost and Ben Nye for the Investing Podcast. Catch you later. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.